Could you hear me? Could you hear me, bro? Testing, testing. Fuck, delete that, delete that. Right. What you say?
I can.
You type it because your mic keep cutting out, or just uh put the volume on your mic up a little bit. Could you hear me now?
Yeah, can you hear me?
Yeah, I can hear you. Alright,
All
so
right.
I'm gonna be going over the pump and dump setup. Usually, for 3 days the market will pump up, and for us to get confirmation when to sell. So like there's going to be two short opportunities. You don't need 50 trades to be consistently profitable. All you need is two best trade setups, one to two best trade setups that are that 90% of the time it's gonna hit a home run runner. You get what I mean? And you want to be able to scale up. You want to be able to scale up in size with those setups. So that's how you make that's how you grow a trading business account. I know a lot of times people like I remember in the retail space, they'll say it risks 1, 2, 3%. But with a 90% setup, you could risk a maximum of 5 to 10%, depending on the trader you are. But you don't want to go risk 25% because it's a probability game. Trading is a probability game. What that means is that, like, let's say 18 out of 20 trades you're gonna hit, right? And then two of them is gonna be losses. So you never know the outcome of your trades, but you know 90% of the time you're gonna hit a home run runner. So you don't want to risk 25% and then that first trade you lose, and then you get a whole winning streak with the following trades. You get what I mean? So you want to be thinking in series of trades. But let's go over the three levels of price. Um, this is the 15 minute. Right? I'm on MT4 so I can show it to you clearly. I know that on TradingView is kind of hard to see because there's just so much going on. So anytime the market triggers the previous day's high, right? That trigger breakout traders. So the market just don't want to trap traders. It also want to get more traders into the market because eventually it's gonna trap them. So it's like sending an invite to like traders. Yeah, come on in, come on in. It does it 3 times. Usually people aren't buying the first time, but the second time they're buying, and then the third time they're like, yeah, this market could be we're in an uptrend. It could be going up. But what they don't know is that it's a pump and a dump setup. So oftentimes when the market hit the previous day's high 3 times, which it did, look at the opening price on the third day and look at the closing price. First, let's look at these two previous days. The closing price was above the opening for 2 days, and on the third day, the closing price was below the opening. That's called the first red day. In order for it to be called the first red day, it must be a pump up first and then a down day. It can't be a down day and then another down day and the first red day. Don't go like that. It has to be a pump up day first. When we get a pump up day, the first red day doesn't have to, the trade doesn't have to happen the next day. It could take 1 or 2 days to set up. That's why it's important. I don't know if you heard you heard about supply and demand zones.
Yeah.
So oftentimes you'll want to mark there'll be a supply zone being left over, and this is called the inside day. Inside days are known for they're powerful, like they're powerful confirmations. So first red day is one confirmation. Inside days is another confirmation. An inside day is a day that's inside a previous day's range. So this is Friday's range, Friday's high and low. This is Monday's. Monday is inside Friday's high and low. See that? That's called an inside day. So if you don't get a first red day, but you get an inside day, that's still a confirmation to take short. So we get an inside day. Inside days are powerful because once price breaks the high of the inside days could be known as false breaks. Anytime price breaks the high of it, it'll reverse automatically. They're known for they're known for false breaks. So don't think that inside days are breakouts. They're just known for false breaks. 80% of the time, they'll do a false break when they hit the high of the inside day. If they hit the low of the inside day, it'll be a false break. It'll reverse to the other side. Make sense?
Okay. Yeah.
So we got a first red day, and then price starts to drop. Notice how they staircase their way up, but once it starts to drop, it goes vertical, straight down to the previous week's low. That's called the pump and dump. They're trying to get more traders into the market. They'll consolidate, picking up orders in the supply zone. This is where you could scale up in size. You could risk 5%, 10% to gain. Um, I'll be targeting when you see price forming a box. I don't know if you heard of Peter Brandt, but he's a classical chart and stock trader. He trades classical chart patterns. He talks about rectangles. When you see price forming a box, think of it as coiling fuel for the jet. So this all of this right here is trap volume. They're trapping volume up high. That's confirmation. When you see trap volume up high and price breaks out of that trap volume, it's gonna explode very, very fast. So price forms a box. Usually I'll be targeting. You could use a fib extension. I think it's like this. Let me see. No, it's not that. A fib extension, I'll be targeting one full expansion of this range, securing 80% and leaving a trailer. Let me show you another example. It's important that you have, if you look at the bottom of my MT4, I have a lot of pairs, instruments, and stuff like that, because you don't want to trade one pair. It may not set up. If I'm just trading the S&P 500 and I don't see a setup, it could be setting up on US 30. It could be setting up on GU. You get what I mean? But they trigger the previous. And one important thing, they could trigger the previous breakout two days in a row, and close as the first red day. It doesn't always have to be 3. It could be 4 days. It could be 5 days. But when we get a first red day, that's confirmation that they could be selling low. Oftentimes, if we get a pump up, right, and Friday is the end of the week, and when Monday open, the trade doesn't have to follow through. That's important to understand. They could start a new template for the new week. So let's say we get 3 levels of rise last week, right? When the new week starts, it'll start all over again. It'll go up 3 levels of rise again. It doesn't always have to complete the move. So I just want you to be aware of that. But notice how that's why it's important to look at different pairs, because on the NAS 100, this did tap into the supply zone, but on the S&P 500, it didn't. That's why it's important to look at multiple pairs, because oftentimes they'll give a better entry. But we hit the previous, these lines represents the previous day's high. You can see that right there. We hit the previous day's high, 1, 2, 3. Where's our confirmation? We closed as the first red day. Opening price, closing price, okay. And then went straight vertical, straight down. You may get a second entry once we tap into the supply zone, 30-minute supply zone. Went straight down, vertical to the previous week's low. Oftentimes, it doesn't always have to go to the previous week's low. You get what I mean?
Mm-hmm.
Let's look at gold.
So you normally sticking with I see a lot of them on the 15, and that's a normal time frame you stick with.
So I use the higher time frame to mark my zones, the demand zones, right? But I use the 15-minute to see if the market's setting up. Make sense?
Okay, I guess.
Oftentimes, so this is very important. I'm gonna show you something real quick. So let's say you on a third day, right? Let me just take out these candles real quick. Let's say on a third day, let's say this is the third day, and you see a pump up, and then we make lower lows or a break in structure. It's not a break of structure, it's a break in structure. When you see a lower low being made, that is the formula for the pump and dump. It must be a pump up first, a lower low, and then a pump up for the dump. So this right here is our distribution phase. I know you heard of distribution, stuff like that. Price is just coiling volume for an explosive move. All of this is just getting the first mouse to sell first and then stopping them out, picking up, transferring the weak hands to the strong hands, and then going straight down. That could happen with the 3 levels of rise. We may not get a first red day as our confirmation. I can't really tell if it's a first red day, but we may not get a first red day as a confirmation or an inside day as a confirmation. But if we making lower lows, that is the formula for the pump and dump. Remember how I was telling you, when the new week starts, it doesn't have to complete the move. It could start a new template. That's exactly what happens with gold. But gold, oftentimes you'll find that indices deliver better than gold, but they hit the previous day high. 1, 2, 3, lower low being made. Formula for the pump and the dump.
Okay.
Let me show you more examples because, all right, on a lower time frame, they do make a lower low. I could go on a lower time frame, but I don't want to get lost. They pump it up, hit the previous day's high. This right here, I wouldn't count this as a breakout because what's it called? A breakout must be a closed candle above. It triggers some breakout traders, but that wouldn't be counted as a breakout candle. This is a breakout. It triggers breakout traders. They pumped it up 1, 2. The third time they failed, but we made a lower low. They head up and went straight down, straight to the previous week's low. There's slight variations, and then the next day it closed as a first red day. But like me personally, I would not have traded this. Yes, it closed as a first red day, but we're down low. I'd rather a first red day be up high. You get what I mean? So you have to be very cognizant of the fact that you want to be very picky with your setups. Understands how your setups look like. You get what I mean? This is the NAS 100. My bad that my MT4 is a little laggy. But they pump it up 3 levels of rise. Confirmation, where's our confirmation? We get an inside day, first red day. Oftentimes they'll show you one confirmation, or they could show you 2 confirmations. We get a first red day. This is an inside day, inside the previous. Let me just remove this line so you can see. You can see that it's inside of the previous day's range, and it's an inside day. Inside days are known for false break. So anytime you see price breaks above the inside day, it's known as a false break. And notice how they didn't take out the previous week's low. They reversed. There's a hidden demand zone over there, and I'll go over that with you later. But oftentimes, if I was you personally, I would like to sell markets that's if you're in a very bullish market, the win rate will be like around 80%, 80 to 85%. If you're in a bearish market on a monthly time frame, for example, and the weekly time frame is everything is bearish, you're gonna have like a 90% success rate with these trade setups. But you can see they pumped it up. I think they pumped it up 3 levels. 1, no, I wouldn't count this as a breakout, but they pumped it up, still closed as a first red day, right? And then they went straight down. They didn't fully tap into it, but I know people trade fair value gap with the ICT concepts, but you still could have taken that trade. Me personally, if I'm trading currencies, right, I would have like a stop loss 25 pip max, 25 pip max stop loss, just to give my trading. Because sometimes I know that the spreads could vary. Sometimes the trade may not set up during the U.S. session. It could set up during Asia or like the gap timings and stuff like that, and then it goes straight down. And don't worry, bro. When this Zoom call is being recorded, and I got PDF files full of the 3 levels of rise setup and stuff like that. But you want to be knowing. So if you know that your setup has a 90% win rate, right? For example, why wouldn't you not want to put size in those trades? That's how you grow a trading business. You know what I mean? You don't want to risk 1% knowing that you're going to win 90% of the time. If you have a 30% win rate and you're scalping and stuff like that, because scalping, everything is 50-50. Of course, you want to risk 5%. The reason why you want to risk 90%, you want to risk a lot on this trade, like a very good amount on this trade, because you're trading with the higher time frame traders. So if there's major red news, the major red news is a completion for completing the cycle. Most of the time, 80 to 90% of the time, when there's major red news, it will not go against you. It's just completing the move for the higher time frame traders. That's why with these three levels of raw setup, um, it could explode very, very, very fast and go straight vertical, straight down. Um, this is US 30. Uh, these lines, these colors represents the sessions. The blue is Asia, but you can see that they pumped it up. Um, this was a first red day, but it didn't give a clear entry. Like me personally, I would not have traded this. I like something clear and simple. Let me just scroll back. We got a first red day. They pumped it up three levels. One, two, three. We got a first red day. It did not tap into our supply zone. Moving on to the next pair. You don't want to force yourself to trade. It did complete the move. It did drop, but did it give a clear entry? No. That's why it's important to look at multiple instruments. You don't need to look at 12 instruments. Just um look at a basket of like five instruments, for example. You get what I mean? I notice you may get like overloaded with too many information, staring at too many peers and stuff like that. That's why you should narrow it down to like five or four. You get what I mean? But you can
Mm-hmm.
see that they pumped it up two levels of rise instead of three. The second level closed as the first red day. The first red day doesn't have to happen right away. It could take 1 to 2 days to set up. The next day forms a consolidation. It's just trapping traders. Anybody who trades the lower time frame, they're thinking, or anybody who trades the setup, they're thinking it's gonna sell. It's gonna sell right away, but it's just consolidating and stuff like that. We already got our zone right there. Our supply zone started to move down. When we get a lower low, remember how I was telling you when we get a lower low like that, that's the setup for the pump and dump. We make lower lows and then they pumped it up for the dump back down. Three levels of rise. You got any questions? Let me just show you currencies now. They pumped it up. One, two, and three. They pumped it up three levels of rise. But was there confirmation? No, there's no confirmation. Why would you be selling? That's how traders get jammed. You're trading in front of the move. But they pumped it up four levels of rise. Doesn't always have to be three levels. They pumped it up four levels of rise. We already got our zone marked up somewhere around there. But the next day it did not follow through. It consolidated. It trapped traders. The next day could be a trap. Trapping traders. Oftentimes Mondays or Tuesdays will be traps. But you can see that Tuesday trapped, but they made a lower low. That's a break in structure. When we make a lower low, that's the setup for the pump and dump, and it went straight down. I know I'm going a little too fast, but does that make sense?
Yeah, I got, I got majority of it. It's just, I guess it'll take a while
Yeah,
to
get used to it, right?
to make sure you get that clear setup.
Yeah, but don't worry, I'll have these like screenshots and stuff like that. Um, you got any questions?
Nah,
So like how long you been training for? Your mic is on mute. Yo, where you going, Mabatu? text it to you. Could you hear me?
Yeah.
All right. So, so how long you been trading for?
Since about a year and a half.
And you never heard about the pump and dump setup or the closing and opening price,
Nah.
but you felt like it opened you up a little bit about the markets.
Yeah. I mean,
It's the same thing with the drop as well. So like, let's say the drop could be this isn't. I'm gonna show you that on TradingView because on MT4 is not. MT4 is better to spot the three levels of rise, and TradingView is better to spot the demand and